Hello and good evening, everyone. Welcome to a new episode of Investing Fool, where we talk about DIY momentum investing. And as discussed in the last video, today's video will focus on the rebalancing, where we are at the middle of September. So we have made certain changes in the portfolio. So we'll discuss about those changes. We'll look at how some of these stocks have performed in the recent past, and we'll also take a quick look at the portfolio and see how the stocks have performed today, how the sectors have performed today. We'll try to keep this video short, so let's just get started. Those of you who are new to this channel, you should know that we have been tracking this DIY momentum portfolio for over 9 months now, and if you want to be a part of this journey, all the entries, exits, everything is in public domain. You can access it anytime. So if you want to be a part of this journey, please consider subscribing to this channel. And before moving on, the familiar disclaimer that whatever stocks, indices, whatever we talk about on these videos are just for educational purpose. So please do your own due diligence before investing. Okay, starting with the mid-September rebalancing trends. So portfolio is currently at the all-time high. Market is also very close to all-time high. And whenever the portfolio goes to these all-time highs or quickly rises, it's very likely that some short-term correction is around the corner, right? So that is just a caveat. I do not know how the markets are going to perform, but I just want to lay it out there that like whenever the portfolio has inched up like too quickly, then it usually has corrected a bit, not by a lot, but some sort of it can be either time correction or some sort of quick fall that is very frequent in momentum portfolios. So we may see that. I'm not sure with the rate cuts happening how the markets globally are going to behave, but some form of little bit of a correction could be around the corner. That is my personal inkling. In terms of the entries and exits in this rebalancing cycle, we are making three exits, two large cap stocks, one small cap stock, and three entries. Two of these are mid caps, and one is a small cap. The basic crux of the entire rebalancing exercise is that the old old mantra, I shouldn't say mantra, but the old pattern, that is defense out, pharma in, that thing is broadly intact. So we will see the same thing in today's changes as well. IT has been missing. IT, although as a sector, has been performing a lot, but there are not many IT stocks which are kind of coming in our screener at this point. Maybe they will come later. We'll have to keep our eyes on that. So one basic trend that has emerged this time is that we have let go of all our defense stocks. So in the previous rebalancing cycles, in many rebalancing cycles, we let go of three of our five defense stocks that were there in the portfolio. So those were GRSE, which we exited with a loss. I think BDL we exited with a loss. Cochin Shipyard we had exited with a profit. And in this rebalancing also, the only two stocks, defense stocks that were remaining in the portfolio, which is Hindustan Aeronautics and Bharat Electronics, both of them we have let go. We have kicked those out of our portfolio because they had fallen in the momentum ranks. Hindustan Aeronautics will be exiting with profit. BEL, it's neither profit nor loss. It's almost at 0% change. So in terms of the exits, the winner percentage, which is the number of winning stocks in the portfolio out of the total number of stocks that we have exited, that percentage is up from 41.2% to 42.6%. Loser percentage down from 58.8% to 57.4%. We will look at the exits and the new stocks, everything in a bit. When we talk about the average gain percentage, that has improved marginally from 26.0 to 26.2%. This is the average gains of all the winners versus the average loss of all the losers. So that has declined. Like in a sense, that has gotten worse, right? From minus 10.8% to minus 11.0%. So the losses are also getting bigger, and in some way the gains are also getting bigger, right? So the divergence across them is opening up even further. Ideally, we do not want like the average losses to go down a lot, but let's see how this develops going forward. The average holding period has improved by quite a lot this time, because HAL is a stock that had remained in our portfolio for quite a long time. So this average holding period has improved from 73.8 days to 76.6 days. This gives the sense of how much a typical stock remains in the portfolio. But then we have like sudden exits, like V-Guard. We had shared like a couple of rebalancing cycles ago. So those kind of like very quick exits bring this number down, and any long term stock that we have, like which stay on like for months, for quarters, those kind of take this number forward. Uh, Total, there are 5 pharma companies in portfolio now, and as I said, all defense stocks are gone. So defense at one point of time was like it had 5 stocks out of the 20 stocks, right? So 25% there in terms of portfolio composition. So pharma is currently where defense was a few months ago. So this is how like sector rotation is fairly evident in momentum portfolios. When one sector loses even a little bit of momentum, the rankings start to reflect that immediately, and you sort of get into new sectors that you or that the system thinks may be performing in the future. Now we do not know, right? Defense stocks may again start running. We never know that. But as of now, as of the current rankings, there are 5 pharma companies in the portfolio. Okay, we'll look at some other news items as well, but let's look at the exits first. Okay, so if you can see here, the last 3 rows here, these are the September exits. So Hindustan Aeronautics we bought 15th of January, and we like almost made like 55% gains over here. BEL no gain, no loss, and Granules we exited at a massive loss as well. So these metrics get updated, and all 3 of these are due to the worst rank held criterion. So let's take a look at the charts of this stock as well. By the way, like if we look at the market cap distribution, it has again the proportion of mid caps has increased a little bit in the portfolio, so in terms of the like composition, we have 28.6% mid caps now and 9.5% small caps in the portfolio. The rest of it, which is predominantly large cap. So this is a fairly like conservative portfolio, I would say, at least within the runs of momentum investing. For an overall market participant, this might still be an aggressive portfolio. Let's look at some of the exits that we have made, right? So this the green dots and the red dots basically show our entry and exit points, if you can look on this chart. So Granules, obviously, as I said, quick exit due to the sudden correction. So there was this US FDA Form 483 that we discussed in the last video. Multiple observations were set out for Granules related to quality and hygiene issues, because of which the stock tanked like 17% in a day, and it has not really recovered, right? It might take some time going forward, we do not know. But if we look at what it has caused, basically we entered here. So if you look at Granules, it just remained in the portfolio for 28 days, gave us minus 18% returns, went out due to the worst rank held criterion. Even this did not fall actually 25% from the all-time high, right? So it didn't get eliminated due to the 25% gap from the all-time high criterion that we have. It got eliminated because it has not met the like the top 50 ranks. It has gotten out of the top 50 ranks, and the ranks actually deteriorated quite steeply for Granules. It was, I think it went above 100 on the momentum rankings. But anyway, so we entered here, and the stock, like once it tanked, like there was no respite, and we had to go out because the ranking didn't permit the stock to continue in the portfolio. This is like exactly what catching a top means. So you basically catch the top, and the moment you get into that stock, the stock falls because of whatever reasons, right? In this case, it cannot be called a regular price correction, because it was dominated by that one factor, that one red flag. But that is the that is the major red flag in case of pharma companies. So for whatever reason, right, we actually caught the top here, and we made a huge loss on Granules here, and we had to exit it midway. When we look at HAL, it stayed on the portfolio for 242 days, made 55% returns. So the returns were almost like 83% or 80% or something, and then it slid down quite a bit. It didn't like continue going down like maybe Cochin Shipyard was doing, but it kind of fell, and then it just like it's just consolidating in this region, right? It may it may bounce back from here, go on to make even higher highs. That is definitely possible. I'm not saying that the stock per se is bad. It's just that when we do a rebalancing, we are ranking stocks relatively, right? So if other stocks have performed better than HL in this time period, then they would be I mean, they would go on top of the rankings, and they would come into the portfolios. And HAL, I think the rank was also around 80. So we entered around here, and we exited. So we made the stop, like we were here also, then we slid back, and then we exited here. So always remember that in momentum investing, or maybe in any form of investing, you can never, but especially in momentum investing, right, you can never get in at the at like some bottom and get out at the top, right? That is not always possible, because you want a confirmation of momentum losing out, or the momentum fading, right? That confirmation happens only once the stock starts correcting. So there will always be, from the top, there will always be a little bit of correction when you will get that signal that okay, maybe momentum has faded away and I should rotate my money out of the stock, and then you basically exit that stock, right? So here we made 55% profit. Here BEL, as you see, we bought it I think on June 1st. Then June 4th, everyone knows what happened with that election debacle, a massive correction in that one day. It quickly recovered. It went on even higher. But then again, with the budget and with all those concerns, like the entire defense pack went out of favor for some time, and it fell. It again tried to go up, again it fell, and then it has been consolidating. It became the same kind of, if you look at these two charts, right, they are almost mimicking each other. Right, so we entered here and we are exiting here. We are not, so 105 days it stayed on in our portfolio, no loss, no gain, time waste for us. So these are also the realistic scenarios that come up in momentum investing. These are probably the more favorable scenarios. At least you are not losing money, right? You lost time, you have the opportunity cost of that. You could have invested that money, I don't know, somewhere else, right? But this is the part and parcel of the strategy, that this will always keep happening. Okay, now let's look at the stocks that we are entering. So as has been the trend over the past few rebalancing cycles, pharma stocks are entering. Pharma stocks, there are a lot of pharma stocks in momentum screeners nowadays. Because money has been moving to the defensive sectors, right? Be it IT, be it consumer, be it pharma, money is moving there, and some sort of slowdown is happening in the sectors that were traditionally moving a lot, right? Be it like capital goods, defense, railways, anything. Right, so pharma stocks have like, you can look at the charts of this, right? This is Jubilant Pharmova. Whenever I say Jubilant, automatically Jubilant Foodworks aata hai dimag mein. But anyway, this is Jubilant Pharmova, 19,000 crore small cap company, RSI of 88, 1 year return is 171%. Look at this last green candle, it's very powerful, and yeah, I mean, so that's the first pharma stock. The second pharma stock is Suven Pharmaceuticals, 1 year return of 114%, RSI of 77, market cap of 31,000 crore. Okay, so fairly sized. The other one is, as per our categorization, it is a mid cap, but I would probably consider it as a large cap. It has been there for so long. Voltas has been performing nicely, has been a multi-bagger in the past 1 year. It was not performing so well before that. So 1 year performance is 115%, RSI of 78, and market cap of 64,000 crore. Okay, so these are the stocks that have come in the portfolio, and let's go back to our all-time sheet. The changes have been reflected there. So we'll just see how different sectors and stocks perform today. If we look at the different sectors, right? So today the the conservative sectors or the defensive sectors were not actually performing a lot. You can see FMCG minus 0.72, IT minus 0.10, pharma also in negative. Most other sectors apart from these, we can ignore PSU Bank. PSU Bank has not been performing for a long time. But if we look at the other sectors, everything is green except these defensive. So maybe people have like gotten back into that rally mode again. Key risk off and risk on, the definitions have again like probably come into the play, and people are betting on the risk on sectors again. Probably, I don't know. We will see after a few months maybe. But let's look at the gainers and losers today in today's session. So this this one day return is not representative, at least on today, because this was I think 0.7 or something when I had not updated the stocks. So anyway, on a rebalancing day, stocks are changing. I mean, portfolio is changing, right? So we can disregard it that day. But anyway, the broad thing is that our portfolio was still higher than the base index, which is Nifty 500. And overall returns, if we look at pre-tax, we are at 46.4 versus Nifty 500 36.2, and if we look at the post-tax and STT returns, it's 36.6 versus Nifty 500 31.7. And the market has been good lately. I mean, some concerns have faded away but these times cannot persist like this, right? So some correction will come. We'll just have to wait for when it comes. Trend again went almost by 2%. It's close to that 150% net change mark now. But this is not any like indicator of any sort, because Cochin Shipyard was also like more than 200%, I guess, for us. But when it fell like crazy, and we finally like exited, I think, with 145% or something profit on Cochin Shipyard, right? So this is not indicative. You should only celebrate your changes, your net changes, when once you sell the stock and the money is in your account, right? Anyway, so Zomato was up 2%, Trent was up 2%. The largest gainers were Dixon, almost 7% up. We'll talk about this. And then there was another stock. Which stock was that? Oh yeah, Godfrey Philip. So this was up 11% again. And there is a 2-to-1 bonus coming for Godfrey Philip. So that's something that you should keep in mind. PCBL was up 5.5%, Jubilant Pharma was up 3.3%. But then we can discount these stocks, because whatever prices we buy it, there will always be some deviation by the end of the day. For example, here we have lost, like in Suven Pharma we have lost 3%, in Jubilant we have like gained 3%. So it doesn't matter. But of the existing stocks, Godfrey Philip, PCBL have made good gains. Dixon Power India was also up 3%. Oil India, for a change, was up more than 3.5%. So that has been the trend. And the performing stocks, which were like performing really well for so many continuous sessions, those have been the laggards today. So Kalyan has fallen by almost 2.5%. Inox Wind has fallen by 4%. But if the stocks have risen up so much, then a little bit of consolidation, a little bit of correction is always in due. So we should in fact be looking out for them. If they do not come for a long time, then we should be careful. Okay, what is happening in these kind of stocks. Portfolio price to earnings has gone up again with these new stocks. So you can see Suven Pharma has a PE of 124, Voltas has a PE of 140 almost. So that has what increased the PE of the portfolio even further. Advance to decline ratio was 1.8 today. If we go back, so there was I think there was a couple of items that we missed on the first slide. Okay, yeah, so there were a couple of news items. So first was a news on Dixon's MOU with Asus to manufacture notebooks, and so to manufacture these laptops. So that's why I think the stock was high today. And I guess some brokerages have also come out with a good outlook on this entire space, not particularly on Dixon, but yeah, that also may have some role to play with it. There is announcement of a 2-to-1 bonus for Godfrey Phillips. I think the record date is September 20th. I'm not recalling it. I'm not sure on this. You may have to check it, or I'll share it in a post on the YouTube channel. Oil India, there is this report that it is having some sort of tie-up with Total Energies from France for exploration on India's sea coast, gas exploration. So this could explain why Oil India was up today, because Brent crude has not hasn't gone up back, right? It is still languishing, I think. So probably because of this region, Oil India for a change has given a green candle, because it was falling like crazy for so many days. So yeah, so these are basically the changes in this rebalancing cycle. If you have any questions or issues regarding the rebalancing, please let me know in the comments below. And if you like this video, please press the like button. If you haven't subscribed to the channel, please consider subscribing. So that's it for today. Let me know your views in the comments below. Let me know which stocks you are moving in and out of your portfolio. That will create some good discussions for everyone. And yeah, till then, take care, and I'll see you in the next video. Bye bye.